5 numbers to analyze and conclude when you're going to invest in a condominium in Phnom Penh, Cambodia. What are the factors that bring a favorable result for your condo investment? An investor always looks for an investment opportunity which is both lucrative and safe for the hard-earned money he puts into. That is absolutely the normal thing one should do before throwing money into the thing. With a sum of capital on hand, especially the hard-earned money, choosing what to invest into could be a matter hard to decide, whether investing in a low-risk, passive revenue-generating asset, medium to high-risk stock, or a high-risk, high-return startup. Of course, a number of things to dig deep in order to see the profitability, risks, and opportunities, and here are 5 numbers to analyze and conclude before investing in a condominium in Phnom Penh. Number 1. The return on investment, rental yield, internal rate of return, and cost-to-performance ratio. In Phnom Penh, condominiums provide better rental yields than do any other property types by providing 6% to 8% per annum for most of condominium projects across the city. A few projects out there could make it even up to 10% to 12% due to their good management and quality of the products they offer. This is way better than a high-priced shop house or a detached villa, both of which can only run through less than 5% per annum of rental yields. For example, if you're going to put $100,000 into a studio unit at a condo project, let's say Lekon Bay KK1, it will yield a monthly rental return of about $666 based on the average rental rate in the area, and considering the quality of the condo, which should grab an annual rent of 8% of your bought price. Here is how it comes. Annual rental yield equals monthly rent multiply by 12 months divided by the cost of investment. Therefore, annual rental yield equals 666 multiply by 12 equals $8,000. 8,000 divided by 100,000 equals 0.08, it means 8%. So what are the key indicators for condominium investment? Here are the key market averages you should know. Rental yield is approximately 6% to 8%. Asset value appreciation is approximately 2% to 3%. ROI is about approximately 20% to 50%. IRR is approximately 3% to 8%. Cost-to-performance ratio equals 0.85 to 0.30. Now look at point number 2. The comparative analysis of similar assets. When you are looking for a condominium to invest in Phnom Penh, you will definitely be hassled by which one to choose to maximize your expected returns, since as many as 520 condominium buildings scatter across different areas of Phnom Penh. In this example, I will provide a simulated comparable analysis for your study to understand it as compared to the real situation. Looking at the 5 comparables, you might have to consider and choose one to invest. Let me simplify to make you easier to understand. There are 5 condo projects for you to choose. They are Condo B, C, D, and Condo E, each with 3 investment options. Option 1. Non-GRR. This option, you may need your self-rental service or use other third-party services. Option 2. With GRR combined with self-rental services. GRR guaranteed rental return means you buy your condo with a plan of leasing it back to your developer for a period of time, say it 3 years. Option 3, GRR 18% upfront advance, deduction. Sometimes, if you are short of capital for the condo project you are considering on buying, you may opt for GRR 18% upfront advance or deduction. Next, look at point number 3. Investment comparables by portfolios, average industry rates. For general understanding of the investment performances by each of different investment portfolios, below lists some important investment types with their IRRs and degree of risks. Some investment choices may yield less but pose low risk, while others may yield higher but pose higher risk. Therefore, you have to choose the ones with optimal yield and risk. Investment Portfolio 1, Condominium. On average, let's put it into a fixed term of 5-year investment. If you're going to invest into a condominium unit in Phnom Penh, the threshold of internal rate of return IRR is between 3% lowest to 8% best, with the average of 5.5%. Some condo projects may return better thanks to their quality, location, management, and facility factors. And the most important point is that condominium poses less risk and is a mild passive investment. Investment Portfolio 2, Bank Deposit Denominated US Dollars. Bank deposit term deposit is the safest investment of all. If you have a large amount of capital and don't want to take any risk, depositing money into the bank with a fixed term is the safest, usually with the return of 2% to 3% per annum. However, it is the most passive investment, which means comparatively very low return rate. Investment Portfolio 3, Land asset located in outskirt areas. Investing in a parcel of land can be very lucrative, but it may pose a huge risk too in some circumstances. For example, you bought it just for $10,000 for a half hectare as it was a wetland condition just 5 years ago. The next day after the plan's announcement from the government, your land price will hop up $500,000. That's a fortune, isn't it? Though this sometimes happens in Phnom Penh City. So your IRR should be about 118.7%. Investment Portfolio 4, Informal Loan Business. In Cambodia, informal loan business is not protected by laws, but you can still operate it. This investment portfolio provides a high rate of return, yet it poses very high risk. The average rate is between 18% to 24% per annum. That's a very huge return compared to normal investment options. You can get rich very fast, but also risk losing a lot too, due to defaults and having no laws to enforce your loan contracts when bad things happen. Investment Portfolio number 5 and number 6, Stock and Bond. However, stocks and bonds are not much fun to play in Cambodia, as they are not very much active. Investment Portfolio number 7, Start Your Own Business. Start up a new business can sometimes yield a good result thanks to your contribution to the revenue generation and therefore yield a higher rate of return. Some business ideas can make you rich fast, but it really needs your smartness, hard work, good and right idea, and the way you operate. It is the very active investment. Point to look at number 4, the Market Insights. Market insights and knowledge of the supply and demand are very crucial for you as an investor looking to invest in a condominium. Whether the market is narrow or broad for your idea to successfully make a gain on the investment at this time, there you will look at. 1. Condominium supply. About 520 condominium buildings scatter across Phnom Penh capital, and many of them are located in CBD areas. Total of these condos combined gives a market supply of about 142,700 units, 76,600 of which are residential ones. Up to now, most of the condominiums were and have been recently completed and in services. The majority of the units are owner-occupied, or some left for rental or run as serviced apartments or condotels. 2. Tourism and lodging supply. Number of international tourists coming to Cambodia was almost 6 million. While it is forecast to reach about 8 million by 2030, the current supply of accommodations, including all lodging types, is about 95,000 keys units, and it will reach about 11,000 keys units by 2030. While occupancy rates for hotels was about 75%, and so did serviced apartments and condotels across Phnom Penh city. Therefore, the risk is optimal for your investment plan. Last thing to look at, number 5, the overall economy and external factors. Fast-growing economy and improved infrastructure. Cambodia is listed as one of the fast-growing economy, largely thanks to exports of agricultural, textile and garment products and the improved tourism industry. The direct foreign investments contributes to the major growth, while the real estate investments drive a large part of the growth, with the support of mortgage and real estate financing schemes from banking sector.